Hello, everyone. Welcome to today's webinar. I'm Mike Perkowski with American Banker. I'm pleased to be the moderator for today's program, Successful and Secure Customer Onboarding, How to Open Access to Digital Banking. Before we begin our program, I do want to take a moment to acknowledge and thank Onfido for sponsoring today's program. We appreciate their support. Today, we're fortunate to have with us three expert speakers who are going to cover this topic in a fireside chat kind of conversation and who will be answering some of your questions in the Q&A part of our program. I'm going to turn it to them to begin the conversation by just telling a little bit about themselves. Ahron, would you please start for us?
Yeah, of course. So my name is Ahron Geminder, and I am the Global Head of Third-Party Services at HSBC, and also look after HSBC's digital identity product. So for those of you who don't know, HSBC is one of the largest tier one banks in the world. We have operations in more than 60 countries with more than 40 million customers across the full range of banking products. Great to be here.
Hi, everybody. I'm Michael Fox. I'm the head of risk and compliance at KOHO, and my area covers everything involving fraud, anti-money laundering, risk management, definitely digital identity and overall identification. KOHO is the leading consumer-facing banking challenger in Canada, for those who are not familiar with us.
And my turn, I'm Katya Mar. I head up product marketing division here at Onfido. So I basically look after launching the product into market. Representing Onfido, which is a company that verifies consumer identities online so that both businesses and individuals can be protected from fraud.
Okay, thank you all. Let's get started. As I said, we're going to have this as a panel discussion, more like a fireside chat. We want to hear from each of our presenters here. So let's get started. Michael, I'm going to ask you the first question, and then I know our other panelists are going to join in as well. So Michael, our first question is, how can modern banks ensure a great customer onboarding experience?
I think there's a few things that are important there. The first, and something we really emphasize, is time to value. People want to be up and running quickly. I think that consumers shop for new financial products increasingly at the moment they need them, and they want to get through fast in the moment. So part of our offering is that you can actually be up and running in 5 minutes effectively. So that I think is just increasingly important. I think it should instill trust. This is people's money, and it's very, very important to nail the trust aspect of this. And I think it should go as they expect it to. So it's really important for modern banks and other financial institutions to manage expectations upfront and avoid surprises through that onboarding experience. So people are coming in, they know exactly what they're going to need to do to onboard. They can get through it in 5 minutes and be on their way and up and running with the products.
Yeah, I mean, I couldn't agree more with that. It sounds a little bit straightforward and it sounds a little bit obvious, but it's about putting the customer really at the heart of everything that you do, and making sure that you're building journeys with a really solid customer mindset. It sounds really obvious, but for a very long time, the very big banks around the world weren't doing it. And the challenges are the ones that got everyone waking up to, really focusing on the customer experience and really focusing on how you make it straightforward and simple for customers to onboard. I'll echo what Michael was saying. Our big focus is really on, making it really intuitive, relevant for customers. Again, the 5 minutes seems to be the magic mark that everyone has. But it's about starting to look at, in the past of seeing forms that were 60, 70 pages and incredibly complicated and required you to, dedicate an evening to opening a bank account. Now it's really quick, really straightforward, and really easy. So yeah, I think that's ultimately the other bit we tend to look at is, yes, it's a bank account. There are certain things you're going to have to answer, and there's certain steps we need to put in. But other businesses, other e-commerce companies have really revolutionized how they do onboarding, and a lot of banks are now learning from those companies to try and mimic those experiences.
To play off of what Ahron just said, I think when we look at end user expectations, they don't differentiate between whether it's experience opening an account in a bank or starting an app somewhere or launching a new program. The Amazon-like experiences are the expectation now. So players like Amazon, Netflix, Apple have raised the bar when it comes to what that interaction should look like. They offer instant access to services across multiple channels, and consumers expect everybody to be as quick as those applications. And it only has been heightened by the rapid digitization that escalated during the pandemic years. Another thing that we look at is ability to bring in every single user who wants to use the service. So inclusivity in mind is a top challenge for us to enable our clients to think about. And with that, I suppose one of the things to be wary of is the bias elimination, which is a big topic, especially when it comes to artificial intelligence. The AI should be trained using global diverse data sets that allow to reduce bias so that all customers are treated fairly. In addition, when we think about the user interface for the applications, we also bring in accessibility features, again, so that we can tap into every single consumer that would be willing to use the service.
I mean, one thing you mentioned, a magic word for us, Katya, which is around accessibility. So there's a huge drive for us within HSBC to become the most accessible bank. So everything we build goes through rigorous accessibility testing for that very purpose. It's around inclusivity and making sure that everyone has that ability to have a great experience. I think something for us as well is our focus can't just be digital. So obviously with HSBC, we've got branches in almost every country we operate in. And customers need to be able to have a great experience regardless of the channel they choose to interact with us. So whether it's on your mobile banking app, whether it's on a website, whether it's in a physical store, in a physical branch, you must be able to have a great experience and a consistent experience.
Goes without saying that onboarding experience is the first impression, and people that are opening accounts are going to use that as the indicator of how the rest of the experience with the financial institution is going to go. And certainly, I've opened accounts in the past where I think I'm going to be able to do it all online, and then there's a prompt to go into a branch or print a form and then sign it and mail it off. There's just not a lot of consumer tolerance for that anymore. They really want that smooth, seamless handoff. The part about anti-bias that Katya mentioned did really resonate with me. We have really strong product market fit between our product and people that are new to Canada. Very much a core portion of our customer base, and it's really important to us that they have as great of an onboarding experience as everybody else who's opening a KOHO account.
Before we go on to the next question, I did want to come back to Ahron for one thing, which you've got HSBC, which is a very large, well-established, well-known brand, if you will, to a little more traditional bank, I guess, in some ways. I would imagine, though, your clients have very high expectations of you that you act like almost like a fintech kind of organization as opposed to an older bank. Their expectations are very demanding of you.
Absolutely, and as they should be. It's it's adapt or die in a digital world now. And I mean, something that's interesting that HSBC saw the challenge that the challenger banks put forward, and have really risen to that occasion of again putting the customer at the heart of everything we do, really looking at every engagement point. And we're not afraid to really rewrite the book, so to speak, in terms of how we're engaging with our customers. I mean, the retail banking CEO, Nuno Matos, talks very, very passionately about customer experience and about a real focus on customer experience. So it's at the highest level of the organization, which is where it should be, where it belongs.
Excellent. Okay, that's a great start. Let's get going and move on to our next one. Obviously, identity fraud is a critical issue that's concern not only to the banking institutions themselves, but of course to customers, both consumers and business clients. Katya, could you start by talking to us a little bit about what types of identity fraud do you think are most concerning here in the year 2023?
Absolutely. Onfido is a global provider. We have hundreds, nearly 1,000 customers globally, large enterprises, and mostly in financial services industry, but also outside of it. So we see all kinds of fraud. We do this identity fraud report every year that shows us the details of changes in fraudster behavior and also new types of fraud that are popping up. And the recent one that we did just a few months ago showed that, as you can expect, the fraud landscape and fraudster behavior is changing again. Unfortunately for all of us, fraud is treated as a full-time job by fraudsters now. Before the pandemic, fraudster patterns followed more like 9-to-5 work week, but today it's 24/7 behavior. It's consistent throughout the day, and they use automated tactics and mass attacks. It's kind of hard to imagine, but the current global financial cost of fraud is $5.5 trillion, which is 6.4% of the world's GDP. And most fraud now is happening online. 80% of it is cyber-enabled. So we need to be diligent about staying on top of that. In terms of types of fraud, 85% of all fraud is estimated to be linked to synthetic identity fraud. If you don't know what that means, synthetic identity fraud, it's a process where fraudsters combine real and fabricated personal information that together create fictitious identities and attempt to benefit from the creation of fraudulent accounts or sign up. This blending of real and fake information makes the fraud very difficult to detect because it looks like a real thing. Another kind of recent thing that we're seeing is the deep fakes. They're definitely on the horizon. Deep fake is a video of a person in which their face or body has been digitally altered so that they appear to be someone else, typically used maliciously or to spread false information. You might have seen the fun videos of our president's head put on somebody's bodies, and they're kind of moving as if they were real and saying funny things. So those are deep fakes. While we can't know when exactly they might become mainstream, today they're still a rare occurrence. The technology is out there, and so one way to protect your customers from this type of fraud is to be sure to have liveness detection in place when you're onboarding new users.
I will second, Katya, what you were saying there, that deepfakes are probably one of the biggest concerns that we're very, very focused on. I think, unless you're living under a rock, you know that the massive increase in the use of AI and generative AI technology is becoming huge. So what used to be a fairly complex process in creating a deepfake now looks to be significantly easier. There are checks and controls in place to support it, but the sooner you put a control in place, the sooner you know someone is going to find a way to exploit it. So the challenge there is quite significant for us. The other bit that we're looking at from our side, at least with the types of identity frauds, is very much on what we refer to as scams. It's less so around identity completely, but it is that kind of exploitation of the weak link of the customer chain, of either somebody is impersonating the bank or impersonating the customer in a way that enables, bypasses a lot of our security systems and is able to exploit vulnerable customers. There's a big focus from our side as to how we reduce that, how we combat that.
The world's made really great strides over the last decade in the transactional fraud space, so that has pushed identity fraud to be the hot topic. For us, that includes everything from completely fictitious identities to identity theft to the scams that you mentioned. And the speed of fraud is accelerating. And opening in minutes means that they can commit fraud in minutes as well. And So some of the old school investigative techniques don't really work in that model. We have to be automated, we have to be rapid. And fraudsters don't have the same rulebook that we have. They don't have compliance regulations. What Katja said about it being a full-time job really resonated with me. They're innovative and they have a well-funded technology agenda. We're pushing into AI, they're pushing into AI, and it's a bit of an arms race with them. At the same time, the identity theft is still really relevant for us. People share a lot of information on social media, and there's been a lot of data breaches exposing people both to enough information that their existing accounts can be taken over, but also that people can use to open accounts with. So we are seeing more and more social engineering, and we've been forcing fraudsters to more sophisticated methods, and they've been adapting to it. And certainly we're going to see that wheel keep turning.
I noticed that it only gets heightened when the global financial situation is a little kind of on a downturn. The amount of fraud that we're seeing is definitely spiking up in those years. So as we're probably in the middle of that a little bit right now, we definitely see a lot of both organized fraud, but also casual fraud. So that's very, very important to stay on top of it.
That's great.
During the COVID time, I think we saw that shift accelerate, where normally there'd be a mix of transactional fraud and identity fraud, and stores just weren't open anymore for people to go have their cards compromised. So we really saw that dip for a couple of years, and it really did push the fraudsters to that identity fraud space just by necessity.
I think what's also interesting is you see certain countries with certain systems in place that the perception of these systems being almost foolproof has been compromised. So we look at countries like Singapore with the SingPass system that's had massive compromises of people selling their SingPass credentials. And when you've got somebody who is in, financial distress and has, someone arrives with, a wad of cash and says, well, I'm going to buy your credentials to create a fake account. If you are desperate, you won't say no. And we're seeing how that has had a significant impact of people feeling very, very reassured that the systems in place were very robust and were I don't want to say foolproof because no one thinks anything's foolproof, but systems that were very robust that were compromised. So we're constantly having to think of new ways of shoring up the kind of certain systems and the certain blocks and provisos that we have in place, and how we how those can be compromised as well.
That's really interesting for me. We've seen similar dynamics where people are cooperating with the fraudsters out of maybe desperation. In a really similar vein, we've seen situations where the elderly are being preyed on, and they're being almost coached and or forced to open accounts, and they at times don't fully understand what is happening, and fraud rings will take advantage of large numbers of elderly people who they have some other connection to, and get them to open accounts that they can then take advantage of.
And that's the terrifying part. I think by now, all of us have been exposed to data breaches as well, more than once probably. So our identities are out there, and they're becoming cheaper on the dark web. It used to be $20 that you needed to have to buy somebody's identity. Now I think it's down to around $4. So you just, and that gives you all the information that you have on your driver's license, as well as perhaps the social security number and address and everything you can imagine. So, so that is a given. That is the reality now. And if you don't have the right protections in place as a consumer, and also as a business protecting your consumers, the volumes are unfortunately just increasing so far.
Okay, well, that's a great summary of the different types of identity fraud. Now, let's talk for a moment about the next step, which is how do you protect from fraud while maintaining a great customer experience. This issue about security versus customer friction is obviously a very, very important one. Let's start here with Ahron. What do you think organizations need to be doing in order to, on one hand, protect against fraud, but still maintain that great customer experience?
So I think there's always going to be a conflict between the two. You're always going to need to find a happy compromise, or in some cases, unhappy compromise between customer experience and onboarding teams, as well as our fraud teams. So from our side, we're using technologies to help ease that process, and we try to make it as unobtrusive as possible for customers. There's an internal policy, and again, it sounds fairly simple, but our big push is to make it really easy for the good guys and really hard, really difficult for the bad guys. And it sounds simple, it sounds straightforward, but it isn't. Every single time we're looking at new protections and looking at new things to put in place, we're always having to weigh up what that does to the customer experience. We always have to ensure that the new controls and the new protections we have don't impact that customer experience. Something else we talk a lot about internally is a concept called necessary friction. So it's putting friction points in where it matters, or where you can, and where customers would expect it. So we'll run experimentation with customers, and we'll put some concepts in front of them. And a clear example: if you're going to make a very large payment to a new payee, so you as a customer are buying your first house, and you're going to basically empty your savings account to a solicitor, to a lawyer to finalize that payment, you would expect the bank at that point to maybe ask you to do a step-up authentication. Just want to be 100% sure that this is you doing this and that you're okay with what's going on. Whereas day-to-day transactions, day-to-day tasks, customers expect that to be really, really simple. So it's finding that balance and finding that niche for customers that is the big challenge.
From a trust perspective, I think you nailed it there on that last point, in that there's certain things where customers actually expect more. And if someone's going to send a $100,000 wire payment overseas, they certainly expect more of a process than just click with a basic password and off it goes. So ensuring that people are who they say they are is job one. People are increasingly getting more comfortable with multi-factor authentication. Passwords are working less and less. Katja mentioned data breaches. I think that's a big part why. And so to the extent that people can get used to that multi-factor authentication, it's really going to help us. Risk-based controls that are, where I'm talking about controls that are commensurate with the level of risk, are really important, and you have a really seamless experience as much as possible for those really low risk, low dollar things. And then when things are super high risk, then you need to step it up. We look at multiple dimensions as well with increasingly sophisticated models. It's not enough just to look at kind of basic ID or even a basic score anymore. You really have to get as multi-factor as possible to reduce the number of people that you get it wrong for. Then the other thing that I think is really important is to make it easy for the customer to fix it when we do get it wrong. If we think someone is a bad actor, you're never 100% correct on these things. So we want to create a really seamless experience to rectify it in situations where we get it wrong and get them up and running again.
I wanted to add that I think it's even, when we talk about balance between fraud and experience, I think there's actually even more in that, more balance that businesses have to find, because on one hand, it's obviously fraud protection and onboarding more users, which is the minimizing friction, but then you have to look at respecting regulations, because some of those paths at how you verify your consumers are already predetermined for you based on where your business is. You need to be onboarding customers in a compliant way. And then at the same time, you need to be controlling spend, right? Ensuring that none of the above is costing the business too much money. But back on fraud protection, what we work with our customers on is figuring out the best way of bringing together a set of passive and active signals to verify each individual, depending on where that individual come from, so that upfront you introduce as little friction as possible to a consumer, where it's important, because sometimes they would be looking for reassurance that, oh, this company is checking my ID and my biometrics, and so perhaps that's a reliable service. So there's a lot of nuances to that, of course. But in general, the multi-layered approach to fraud detection is what we follow. So you layer intelligence from devices, networks, locations, and identities with verification checks that validate these credentials with a source of truth. And staying on top of fraud is kind of the underlying factor in all of that. We have this really cool Onfido Fraud Lab, which is our solution to fraud detection, and the team of Onfido experts that is dedicated to replicating fraud in-house using both physical and digital spoofs. And we then use these fraudulent data sets to train our algorithms so that our solutions are as automated as possible and create as little friction as possible when consumers are signing up with accounts and expecting that 5-minute turnaround time.
Okay, great. Let's move on. Michael, I'd like you to give us your thoughts about our next issue here, which talks about expansion. So tell us a little bit about what you think of what does a global provider need to think about when it's expanding into new markets?
On her last answer, Katja mentioned respecting regulations, and that's important. Obviously, the regulatory landscape is really different from jurisdiction to jurisdiction. Photo ID and selfie was not legal in Canada for identification purposes until much later than other jurisdictions, and there's a lot of a labyrinth of different rules and regulations that a company needs to navigate, and we've had really big companies come to Canada and then leave because they could not navigate that regulatory landscape, and maybe that's because they didn't do enough research in advance. Maybe they did their research and just got hit with some surprises. That regulatory delay has led to cultural differences. There's still some really big players still introducing digital identity in North America. As far as I believe, KOHO was the first financial institution in Canada to introduce digital ID at onboarding for opening financial accounts. But there's still a lot of lagging players there, and that's driving these different cultural norms. A European provider coming into Canada is going to be used to having a photo ID and selfie approach in their onboarding process, and everybody doing it with full trust. Somebody coming into Canada, they're going to be surprised in that that's not normal for people, and we're winning hearts and minds here and building trust on the approach. And part of that journey is for other providers to also introduce this in this onboarding flow and normalize it, so that Canadians and Americans who are in a really similar spot are used to this. They see it as a normal part of opening an account that's secure.
I mean, I can thank KOHO for laying some of the ground in Canada, because Canada was one of the first markets where we went live with this type of technology. So we were the first very big bank in Canada to release this. And I can't agree more. Like, there will be certain countries we go to where now we've reached a stage where most of our onboarding customers in Canada are very used to this type of technology. But when we first went live, the aspect that really surprised some of us were people were just not sure about this. So, I mean, we saw people were really struggling with the technology and struggling how to use this. And it was that moment internally, and again, sounds weird, but internally of reminding everybody that just because certain big countries have been doing this, so just because, for example, the UK had been doing this for a very long time, doesn't mean that everyone else has. So, I mean, our internal identity product is now live in multiple countries all over the world for HSBC. And every country is slightly different, whether it's how customers are interacting with it, how regulators are approaching this. And what's interesting from our side, we're seeing regulators are starting slowly but surely to catch up with the technology. So 3-4 years ago, we would have a conversation with a regulator and they would be very uncertain about what this is. Now we'll have a catch up with the regulator and they're talking to us about improvements to false accept rates and false reject rates and how the model's being trained. And they're now understanding how this works, which is a blessing and a curse all in one.
Ahron made a good point about UK being a little bit ahead of the game, perhaps of the US in introducing regulations and standards. We see that in Europe in general. So much is happening. It's happening so fast that I can imagine it's a big challenge for banks as well as vendors like ourselves, even to get a handle of what's going on and what those expectations and regulations and standards are. For IDD purpose, we always recommend for banks to bring in a global partner who can help navigate local, national, global regulations, everything from KYC, AML, EIDAS with ETSI standards that are being rolled out, and other centralized IDD schemes, for example, in APAC, if you want to be truly global, there's BNM in Malaysia, etc. So huge variety. And having the ability to effectively onboard global customers, regardless where they come from, and operating across these different territories means being able to seamlessly navigate the compliance. And this includes inclusivity, varying expectations from customer experience, quite a big diversity in document types and security features that will come and play when verifying users coming from different parts of the world. That's all in addition to the variety of compliance standards. It's a pretty complex world out there, and US definitely is catching up on introducing new regulations, and Canada, of course.
I think there's a certain responsibility that we have to have as well when working with our regulators around the world. We have to, I mean, again, I say this, very fairly, that you can't not have sympathy for some of the regulators where things are moving so quickly and technology is moving so quickly, and the banks are moving at a rapid pace to keep up with technology, but the regulators are also needing to then oversee all the different banks to then be able to keep up as well. And I think the pace of change is so massive recently that everyone is struggling to keep up. So, from our side, we have an onus to bring the regulators with us when we launch new capabilities, to explain to them, really clearly, really, in a granular way as to why we're doing something and the benefits that this will provide.
I think part of the journey for our market with the existing ID and selfie approach was going back to the first principles and working with the regulators to align that this was actually better for every objective that was laid out from an identification standpoint, whether it was AML compliance or fraud prevention, than the existing methods that we had in place.
All right, so let's put on our thinking caps here and bring out the crystal ball. And let's talk a little bit about the future of digital identity. Ahron, let's start with you. Where do you think digital identity is going to? Where will it be in the near and maybe even the further off future?
Yeah, absolutely. So I mean, digital identity is becoming, a bit of a hot topic, and there are loads of different companies trying to solve this problem. So from our view, and we always look at the ultimately having to take it back to the customer and figure out what is the customer problem that needs to be solved. From our perspective, governments still remain the best source of what would be an digital identity solution. So we touched on things like SingPass, MyInfo in Singapore, and loads of different countries are trying their own different versions of this, but it makes it more universally available. It's owned by the system, for example, that's generating the information. So it kind of starts to make sense. So, in the US, for example, the best provider of, say, a California digital driving license would be the DMV in California. It's when governments don't provide the solution that companies are then stepping in to bridge that gap. The problem that we have to avoid, though, is then customers having dozens of digital identities to manage, all provided by different companies. So I think the future of digital identities is very obvious. I think it is coming, and how we manage that becomes increasingly important. From an HSBC side, we enjoy a tremendous trust from our customers, and it's something we don't take lightly. We respect that quite a lot. Customers are trusting us with their money, and they're trusting us with their data to keep them both safe. So we're starting to look at how do we create an identity solution for our customers that helps them both inside and outside the organization. But from our side, again, how do we avoid that same problem? How do we avoid, well, we've created an ID that's not really compatible with everyone else? So we're starting to look at things established through, for example, open banking protocols, of how do we then make those IDs compatible across every bank. If we look at the UK, for example, how does every bank in the UK offer a type of digital identity product that is cross-compatible? So if I choose to come to HSBC from another bank, I can bring some of my identity information with me that I don't have to now, with the moving of my account, leave all my identity information behind and start afresh with a new bank, because then we're back to square one with what we corrected with open banking. So yeah, I think that there's a tremendous push in terms of how this will kick off. But the future of digital identity the future is of one with digital identity, without a doubt.
I think Ahron and HSBC are absolutely lucky to have such a wonderful brand where consumers consistently choose them and choose to trust with their data to the provider. But in general, as I would say, consumer trend, we're certainly seeing some transformation in how companies interact with their customers and customers with companies. These customers, in general, are becoming more uneasy about handling over critical identity information every single time they interact with a business. Every new business, hacks, leaks, breaches that we spoke about earlier, they're a major threat to consumers worldwide. And as a result of that, and I think we all can feel it as humans, as consumers, we generally want to keep our personal information safe. And so in this reality, the privacy-first, user-controlled identity that can be securely stored on a user's device and accessed with a token or a secure biometrics pushes us into the new era of this digital identity or digital identification. In this scenario, for example, imagine if prompted to prove identity, users no longer will have to pull out their wallet and present the entire information that's displayed on their driver's license or passport, but they could share only a necessary piece, say to prove they're over 21. You don't even need to tell your entire birth date. The information that a business needs to know is that you're of age, you're over 21. All this can be done securely and privately with a push of a button. And Onfido is making active strides towards that direction. We recently acquired a company called Airside, with whom together we're building this future of digital identity. And we're hoping to bring this to our customers very, very soon. Another complexity that's added to this process is, as was mentioned before, the proliferation of digital first IDs that are already happening in some countries, and there is fraud. There is a way to hack into those, but as a business, you have to bring in all this information, whether consumers are providing their real paper identification, the proof of their identity, or they're using digital IDs. So there's just a lot of complexity, a lot of mess, and it's not properly mandated by the governments just yet. So we're looking to bring this all together, and I think that's kind of where the market is headed, so that everything is digitized, everything is meant to be digital first, and instead of applying the physical world rules into the digital world where consumers have to prove their identity in digital space, but kind of the way that we were doing it in the physical world. So the future is moving everything into digital. That enables quite a few benefits for both consumers and the businesses alike.
I think, Katya, you touched on one thing that's a massive one that we're looking at the moment is even just something as simple as somebody proving that they're overage. Yeah. Just, you go into a store to buy something, they need to confirm in the UK you're over 18, and you're handing over a driving license that has your address on it, which suddenly now people are looking at this going, wait, I'm not very comfortable giving over something that tells you where I live to some perfect stranger who might have to go make a copy of that. So even something as simple as that is suddenly got people questioning, hang on, how comfortable am I sharing this bit of information with random stranger over here? I think the one bit that we've got to double check on, though, as you mentioned, with digitizing at scale, is also making sure that we don't suffer digital exclusion. It's making sure that we're offering something that is available to people who maybe aren't as comfortable with technology as others would be. So 80, 90, 99% even, we always have to have a solution available for the people who aren't comfortable with that.
I think broadly, Ahron and I see the world and the future here the same way. I agree that it's heavily portable digital identity with some form of tokenized access and sharing only the parts that they want to share. Today, people are taking pictures of their ID. We're effectively scraping that information from the ID. They have to deal with things like low light and the image is a little bit blurry and it's not in the frame. This notion of a digital identity that they can share and it's going to have perfect, seamless sharing of information. I've no doubt that that is the future. That could be government or non-government. Governments have spoken about this a lot. And I think it will definitely work best if it is government sponsored through standards, partnerships, to foster that ubiquity, if you will. But I think it's going to be a gold rush of standards rushing to get in place. But I want to echo what Ahron said. You're not going to have 100% adoption on this, especially with people that are say new to different countries or maybe disadvantaged, and so we will have to maintain some form of fallback, and we're going to continue to make that as seamless as possible as well.
Yeah, Michael, and to add to your point, whether it's government mandated or it's the private parties that end up creating this widely used digital identity wallet, container, or whatever we want to call this thing that is going to bring together the technology to enable the future, it needs to follow the rules of interoperability. Because if I'm able to use this digital identity, say stored on my phone, to open a bank account, but then and then I can do it in a corner store, but I cannot do it in a pharmacy, then suddenly it's not very useful. So ability to access a variety of different services with my future digital identity is the top of mind. And if it's government mandated, perhaps it opens up bigger doors within the country, but then the government should probably also talk to each other so that you can take that identity elsewhere and still be valid.
Yeah, the big question mark I have here is there going to be a standards war? The analogy I use is something like cables for electronics, where they work really well for that device, but they don't work for anything else. And so if we have this provider with their digital identity and it only works for them and maybe a few partners that they've signed up, and then this provider, this consortium over here, as a KOHO, do we then need to support 20 different digital IDs to allow people to sign up seamlessly with us? Or are we going to be able to solve for that interoperability? Are we going to be able to drive to common standards? Because this this could very well take a while to shake out if there is a standards war, and that could go on for quite a while.
I think that standards war will also come from governments that are almost holding back a little bit. So we could see there are certain governments that are diving right into this and taking a lead, and others that are taking a bit of a step back and waiting to see what happens. And I think, yeah, it'll be interesting to see which governments put their hand up and go, right, enough toing and froing. It's time to take a stand. And as you say, put some guidance together. I don't want to imagine what it's going to be like when we've got digital passports and people don't have that physical document anymore, and you're suddenly arriving in the country and the system goes down. And yeah, how we make that work will be interesting as well.
All right, very good. Well, that's probably a good opportunity for us to take a few questions from the audience. And there are a number of questions from the audience on topics that have already been covered here, but I want to revisit them because so many members of the audience really care a lot about this. One is something that was mentioned at the very beginning and touched on once in a while afterwards, and that's this whole notion of ensuring that your approach to customer acquisition is inclusive and bias-free. Okay, so our audience member specifically wants to know, how do we ensure that our approach to customer acquisition is inclusive and bias-free?
I think there's a few approaches there. The first is to think intuitively about it. One of the reasons that we introduced digital ID was to make it more inclusive and bias-free. Some of our other methods of onboarding were using a credit file, and to use that approach in Canada, at least, they need to have a credit file that has a certain age and number of trades and so on. Someone who is new to Canada obviously does not have a 3-year-old credit file. So our other leading method of KYC was excluding them. It was also excluding people who were young, which we obviously have many customers like that as a fintech startup. So someone who is 19, 20 years old also typically does not have a 3-year-old credit file. So we were seeing really high fail rates, and that leads to the next thing. I think the numbers can tell the story here, and we're all data centric now, and we can see that. So we simply look at the pass rates among people who are 20 years old on those old credit file approaches, and they have like a 2% pass rate, and that also drove some of our decision making around digital identity. There are measurements of how effective these tools are across people with different skin tones and ethnicities, and you want those success rates to be consistent so that you're not failing 0% of people that have one background and 10% of people with another background. So I think measurement is really important here, and what gets tracked and measured gets actioned.
Yeah, I agree with that completely. I mean, we monitor this very, very closely from our side. Again, your customer acquisition has to be bias-free. It has to be open to absolutely everybody. So we're always looking at anything that may be outside of that norm and outside of that process. So yeah, it's about tracking everything, making sure that this is as clear-cut as possible, and making sure that there is no unfairness in the system, because the moment that comes in, then it fails and it doesn't work anymore. Again, something that Michael has touched on is, back in the day when you wanted to go in and open a bank account and interact with a bank, you went into a branch and you spoke to somebody. Before a large swathe of the technology that we use today, the decision of whether you got a loan, for example, was down to how well you knew your bank manager, and whether he thought you could repay it. And that is so open to bias, it's unbelievable, where now we are looking at the factors that would determine whether or not we give you a loan, but none of those factors are around who you are as a person. And that's how it should be.
Absolutely agree with Ahron. Human processes absolutely vulnerable to bias. We're in the automated world. We mostly use artificial intelligence to detect fraud and to do the identity verification. But AI allows biases to be amplified potentially, right? An individual bank employee that assesses credit applications can be biased, but they're only able to process a relatively low number of applications in a short period of time. However, a biased algorithm can process thousands of times more applications and impact thousands more lives. So the ethical and bias-free artificial intelligence is very, very important to enable the bias-free relationships with your customers. We at Onfido, one method we use to verify identities, AI-powered biometric analysis. And that's meant to create trust between business and customers so that customers can be remotely onboarded. And it's increasingly popular as well. Most of our users, 3/4 of our users, find that it's convenient and secure. And for businesses, it also offers high assurance in the face of identity.
I think something to touch on that Katja was talking about, where it's also down to how the models are trained. So, we know that AI got a bit of a bad rap because startups would, send a couple of people to the campus, to Stanford University's campus and, sign up some people and, hey, we've got a great cross-reference of data, and you really don't. And so, working with companies like Onfido that have done millions upon millions of checks with models that are trained on vast swathes of data is how you start to get into a place where your models don't have that bias that AI was notorious for in the past. I think we're in a position now where this technology has improved so massively and models are being trained to such a high degree to avoid that being a massive problem.
Okay, there's time for one more question. And rather than pose it to you exactly the way it's been written, I'm going to twist it just a little bit. The question is, do you think that digital IDs represent the future of customer onboarding? And I think all three of you would feel very strongly about that. So let me rephrase it. Since you all believe that digital IDs represent the future of customer onboarding, what's the most important thing a financial institution needs to keep in mind when moving towards a digital ID framework?
I can try and tackle that one first. I think it's a little bit of what we discussed before up till now. I think it is providing a capability that is a fantastic customer experience, is really slick, really easy for the customer to be able to use. It touches on a little bit of what we discussed in the previous question around ensuring that the service is bias-free and fair and open. But more than anything, digital identities will help us make the experience for customers just that much easier. I mean, we talk internally of, we tend to try and look at, how customers will respond to new technologies. And I'm wondering, how people will react that, the day that you might get pulled over by police officers checking your license, but they don't check your license anymore. They'll take a selfie at your car window to then check against the license that's held on a digital database. The idea of holding a piece of plastic in your wallet as your means of identification won't exist anymore. And some of the technology we're using now are things like NFC and pulling data straight from a passport, for example. You don't have to. All of that information is available to us, and as long as you give us permission to see that and to use that, that becomes really, really simple and a lot easier for a customer. So I think that's where this will come into it.
I'd say it brings us back to our original question about enabling a great customer experience, because some of these changes that are already happening and moving us into digital, they're consumer induced, right? So I think the most important thing to keep in mind is that whether a business, a bank is willing to take a step forward today and look into enabling digital identities and building out the infrastructure, or looking to do that in the future, the market is moving that direction. So it's a question of competitiveness and ability to provide the best customer experience to your users. And in this increasingly competitive world, where a sense of loyalty perhaps is determined by the sense of convenience, excuse me, more so than it was, say, 20 years ago, when if I needed to open an account in a bank, I'd go to a bank branch that is nearest to my house. And because there is not that much competition, the world today is different, right? So bouncing into another provider is easier for customers. So as long as whatever you're doing, whatever new technologies you're bringing in, as long as you can focus on providing the best possible customer experience with a fantastic user interface that is easy to interact with, that enables consumers to quickly access the service that you're providing, that's the cornerstone of anything. And digital identities fall into that bucket as well for me.
I think my answer here is going to be a bit on the nose, in that I think it's really important to ensure a digital identity approach actually does what it's supposed to do in terms of separating bad actors from good customers. We need to go back to the core principles and ensure, does this make signing up for an account and identifying people on an ongoing basis easier for our good customers? And does it actually keep the fraudsters out? And it would be real easy to jump on a trend or a digital identity approach that's using the right buzzwords without actually doing the right due diligence and implement something that doesn't work. And so we need to make sure we're avoiding things like, okay, we have secure portable digital ID, but it's actually not secure because fraudsters have found a way to actually hack all of those digital IDs. Or there's transmission errors, and so 10% of people are failing when they're trying to sign up. So it's I think the core principles on does this say what it does this do what it says it's going to do is often overlooked with these tools, and is really important for us to keep in mind.
And that is probably a great place for us to end our program. I want to thank our speakers today, Ahron, Michael, and Katya, for sharing their insights and their recommendations, for answering your questions. Of course, once again, we want to thank Onfido for sponsoring today's program. We appreciate their support. And last but not least, we want to thank all of you who attended our program today. We're glad you could take time out of your busy day to learn more about this topic. And we hope that you'll join us for a future web seminar brought to you by American Banker and its partners. So on behalf of your host, your presenters, and your sponsor, thank you all for joining us, ladies and gentlemen. We hope you have a great and safe day.